Hello everybody, this is David Blair, the Crosshairs Trader, and welcome to January 1st, 2011. To kick off my videos this year, I simply want to go through some weekly charts and talk about how us Crosshairs traders pay attention to the higher time frame. We trade off a one intraday chart and one daily chart, and the daily chart, and then we always pay attention to several factors in the weekly chart. One of which is when the stock that we're looking at is either extended due to candle counting, which is something I've developed, or due to past support or resistance. Today I simply want to go through a lot of stocks that right now here at the beginning of 2011 are at areas that indicate that they could be ready to roll over, and not to get excited about it. I call those who trade these the there it wasers. In other words, when we look at trading, we look at getting into a trade, everything's lined up, whether it's daily, intraday, weekly, and say there it is, it's a trade. Whereas there are others, the amateurs and those who allow their emotions to get involved, they look at a chart and see that the stock has moved a considerable amount. They feel like they've missed it, so they jump on board. And instead of it being a there it is, let's get in when the risk is low and the reward is high, they jump in when the risk is high and the reward is low. So they do the exact opposite of what the big money does. That's something that we avoid. So when you're looking at these, there are actually opportunities to short them or sell calls or buy puts if that's the way you trade, simply because they're way overextended based on technicals, not based on an opinion. And so when I say that, let's take a look at a few examples. Let's look at CRE. And these are past examples. When CRE had a high candle count, us Crosshairs traders were talking about this past summer, spring and summer. We had a lot of traders talking about how CRE was just going crazy, let's buy, and we talked about no, now's not the time to do that due to our candle counting scenario. And that simply means that we look at where the candles are in relation to these moving average lines, and they were way extended. And when that happens, you're going to have most likely, not always, you're going to have most likely a quick, hard pullback or correction, and you don't want to get in up in this area due to the overextension due to the candle count. Okay, CRE. Let's take a look at Baidu. Here's another example of what I'm talking about. This is the reason why we stay away from them on the long side, even though they might look wonderful on a daily chart. Baidu again was extended based on, again, a candle count that we look at based on this green line, was way extended, and now it has been coming back hard. Here's not the time to get into Baidu. CMG, Chipotle Mexican Grill, is another one. Again, the candle count got very, very high. A lot of emotions got involved with this taking off, and then it started rolling over. So these are the kinds of things we want to stay away from the long side, simply because it's a there it waser. Okay, so we're going to look at a bunch of examples here of stocks that could be setting up to do this right here. First of all, the reason we're looking at that is when we look at the futures are near resistance areas. Here's the S&P future. NASDAQ futures are getting very close to a resistance area, again on the weekly chart. Goes back to 07. Same with the S&P. We can also look at the NASDAQ. We can see there's resistance areas coming in here. We can actually put a level in here, another level. But right in this area is some resistance. We're getting close to that on the NASDAQ. The Dow, same thing. We're getting very close to some resistance that goes back to 08. Same with the NASDAQ 100. We're right there at it. And the Russell 2000, we're again right there at a possible resistance level. Okay, it goes back again to 07, 08. Okay, so we look, as crosshairs traders, we look at what the general market's doing. We look at the futures, the Dow, NASDAQ, S&P. We want to see where resistance levels are, whether it's trending, consolidating, that type of thing. Although we have been trending, we're now possibly reaching areas of resistance. So if we're possibly reaching areas of resistance on the major market averages, then we want to be very mindful of that when we look at these other stocks and not get into long trades. And instead, if you trade these resistances, we could be setting up for a time where if we're hitting the resistance on the major averages, major indexes, then it could be a good time to get into these stocks on the reverse side, bearishly, and buying puts due to the fact that they're in an area where they could sell off. The probability is, and they're setting up to be able to sell off. Let's take a look at a few that are actually in an area that where they have started to sell off already, and then we'll take a look at a few others. ARUN, the candle count again for us crosshairs traders was very high here. You start seeing a lot of dojis and sticks and wicks all on these candles when it gets extended also. That's another characteristic, but it's starting to roll over. Let me change this to red. My resistance lines are red. Here's a real popular one, Decker's Outdoors. You can see again it got really extended on our candle count that we look at. Now it's starting to roll over and easily establishing a resistance line. Now here's another popular one, Riverbed, way extended and could now be starting to pull back, either reverse or consolidate for quite some time. But a huge move. It needs to rest. All stocks that are healthy need to rest. FFIV, F5 Networks, you can see it has had an extended move based on our green line here that we look at, and now it is starting to pull back. So let's take a look at a few. First of all, I want to go through the stocks that are potentially at resistance based on past resistance, past price resistance, and then we're going to look at the ones that may be ready to pull back based on the candle counting. So let's quickly go through these. CPWR, and I've drawn the lines here. We've actually hit resistance on this one, same resistance it hit back in 08 and 07. Look at that. And a hard down, and we don't know what's going to happen here, but again it's extended, and you can see that it's right back up to that area that it's sold off hard many times in the past. DDS, Dillard's, see the resistance back here in 07. We're right in that resistance area, and we've had a long move. FNSR, strong area of resistance up here at around 32 level. We're close to 30 right now. Joy Global, it's had a huge run, but take a look at it. It's had a huge run back here in 08 and then fell. Of course, the market tanked at that time too. And now we're back up to that resistance level. Okay. FCX, copper's been on a tear, but copper was on a tear before and found its resistance actually right in this area. Let's draw another line here. Right in this area here, you can see that possible resistance there. JNPR, again resistance back from '07. So most of these stocks we're looking at found their resistance back in '07, '08, and it looks like we're near that again. KO, Coca-Cola, same thing, back in '08, October, November '08, and it fell back hard. It's had a nice move. Coke has, you can see the pattern here, and it could be doing the same thing again. How about SWC? Stillwater Mining, look at that. Back in April of '08. We're right back at it right now. That's SWC, UTX. Same thing. October '07. Getting close. UTX. PAAS, one of our silver stocks. Silver's had been on a tear, but it was on a tear in '08, '07, '08. Found resistance back near April, March, April of '08, and it's right back up. Candle count's very high also. ROK, Rockwell Automation, it's hit resistance right now. PH, resistance again, April '08 and October '07. Okay, NVLS, popular stock to trade, right at resistance again, back '07, April '07. It's getting near it again. In fact, it may not get up to it. OVTI, resistance back from April of '07, and it's had a move right back up to it. In fact, it's starting to pull back already. Okay, those are the ones that are hitting resistance on a price range here. Now let's look at some that are hitting possible areas due to candle counting. Candle counting here just extended. You can see that on BWA. CMI Cummings has had a huge run. The candle count from our green lines getting high as long as as well as our red line for use crosshairs traders. You know exactly what I'm talking about. TKR, candle count's getting way high, folks. All you got to do is look back at the pattern and see it's time for a pullback if these stocks are very healthy. SWKS, huge move. It's a there it was, or I believe needs to pull back or at least consolidate. CHKP, same thing. CY really needs to rest, folks. When you look at the weekly chart, it gives you a really good indication that stocks they take breathers, and it's time for CY to take a breather. No reason to trade this one up for any reason right now from a risk reward level. High right here, WLT, BEXP, it's getting high, starting to pause and possibly roll back. And EL, Estee Lauder, getting very high. Okay. Now I say all this, and there are a few that have had a huge move, broken through a bunch of resistance levels, and could be pulling back to go back up. There's always a few of those, and I've just got two. Let's look at these. Coach broke through a level of resistance. Let's call it red at that time. Now it can be green. So these could be pulling back. See, there was a level of resistance. Broke through it easily. Could be pulling back to set up for another up trade, but it's going to be a few weeks before we know that. And NLC, this is one us crosshairs traders have traded. We did so this year on this up move, and now it's broken out above a resistance level. It again goes back to October '07, but it's broken out and could be setting up to go back up, and we'll know that over the next few weeks. So that's what I'm looking at. Several stocks as I was looking at my weekly charts today, doing a quick review. Be careful. When you're looking at these charts on the daily, you get excited about them, let your emotions get involved, see that they're running, but then you look at the weekly chart and you have to make a determination, some kind of rule on where you determine that a stock has gotten overextended, not just off feeling or what you think it is. It's got to be based off something technical. We look at resistance lines and we look at candle counting. If you got any questions, want to contact me, David at thecrosshairstrader.com. Visit me. This is one of the things we talk about in Crosshairs Trading University, which is a course that I offer, a 10-week course every quarter. Would love to have you inquire about that. Thank you very much and hope you have a wonderful 2011.